There we go. Hey, Andy, Jamie, what's going on?
Hey, what's up, Scott? Jamie, how are you, buddy?
Greetings, everyone.
All
I'm
right.
good. I'm good. It's Thursday. Tomorrow's
Yeah,
Friday.
it is. It
Yeah.
is. Oh, look, yeah. Friday, and we're looking another weekend for the summer, hot summer weekend in Texas, huh?
Not many of them left. Not many of
Find
them
a
left.
pool.
Hmm.
Hey, thanks everybody, and welcome to Andy's Trading Studio with my good friend Jamie. And thank you for taking time out of your day. We got a decent crowd, and I see some regulars in here, and I see some new people. So let's get started. And before we do, we have to go over our disclaimer. So bear with us. You have heard this over and over and over. This is for educational purposes only. Anything that you see in here should not be construed as investment advice. If that's what you're looking for, seek out a registered advisor, a stockbroker, and but we'll have more fun than you're going to have with them for sure. So let's move on. Talk about our 5-star support, education, and training here. People who have been around a while, they know about it, but if you're kicking the tires, we want you to know that it is a very powerful software, but it's also intuitive, and it's our job to teach you through our many means of education and training here, and it all starts in the traders room. If you haven't been in there, guys, it's free for everybody. So even if you're not a subscriber to Trade Ideas, you are welcome to that traders room. There's about 500 really good traders in there. Well, 500 people. I can't vouch for how many of them are good, but I know there's some really good ones, uh, including Barry, our moderator. So, man, there's a great synergy in there and energy in there. So get in there if you haven't been. It's free, once again, for everybody. We have webinars every day, Monday through Thursday at the 5 Eastern time slot, okay? It's usually myself or Jamie, myself, Steve, or Steve or Jamie doing a webinar, but on Wednesdays, you can a great place to come to hear our CEO, Dan Merkin, and our CTO, Brad Williams. It's a really good Q&A forum, and also a demo to like show you new bells and whistles coming around the corner. So great hangout there. And Friday support session, we'll be doing this tomorrow at 11 Eastern time. It's come one, come all, open forum, no presentation. It's just you asking questions and us answering. For the most part, we kind of stick to the topic of the software, but we don't mind venturing off into trading questions as well. So get in there, guys, if you haven't, or if you have, come in. I guarantee you're going to learn something. And let's not forget TI University. We've had a decent crowd this week, and all of them. So this begins each Monday at 12 Eastern, and it's in the same time slot every day, Monday through Thursday, and it's about a 1-hour curriculum in each class, and then it's opened up for Q&A for 30 minutes. Great place to come. If you cannot make it, we understand some people have jobs and they can't make it. These are recorded. Just go to our YouTube channel, go to YouTube, search for Trade Ideas, and then go to our playlist, and you'll see TI University in there. All 4 of these are recorded for you. All right. Brokerage Plus. Yes, we've been introducing this for a while, and I guess we'll be introducing it for a while longer, but it is no longer in beta. It's out of beta. But it's a great interface to do your trading on, to automate your trading, to trade from charts. A lot of things you can do with it, and it's available for interactive brokers clients, and hopefully soon to be more in the future. I know there will be more. How many? Well, soon we'll find out. But if you want more information, go to trade-ideas.com/beta. All right, the agenda for today. We're going to talk about the market recap as we always do. Holly recap. Boy, Holly had a really good day yesterday, and she followed up with some few good trades today, Jamie, and I know you're going to highlight a few of those in a tough market.
Yep.
So Jamie will take the baton there and go over some of Holly's trades and break down the overall numbers for us. And then, I'm going to do something a little bit different today. We're going to focus the whole remainder of the class, or I shouldn't say class, the webinar on swing trading alerts, giving you some ideas on how to swing trade. I think more people get caught up in the sexiness of day trading when, in fact, honestly, I believe they should be focusing on swing trading. But anyway, to each his own. But if day trading doesn't work for you, there is a great alternative, and it's called swing trading. And I'm going to give you some ideas of how you can use the alerts to find good swing trades, and also give you some backdrop on things I do when I'm swing trading in the marketplace. I've been doing it for a long time. All right, so let's back out and pull up the market here. And let's pull up the SPYs, and let's take a look. One thing I notice about this market over, the last last year, it just seems like when we do break out through highs, like right here is a great example, there's no umph. And I've been seeing this for a while. You can see there, try to get up right here. We just seem to peter out a lot. Here's another great example, all-time highs, and look what happened. Right now, we're trying to do it again. It just seems like, in the good old days, Jamie, it seems like, boy, you took out a level like this right here, boy, you would just explode. It might be because the market, we've been in a bull market for so long. It might be because many people think this is Fed induced, just with free money policy, zero interest rates worldwide. But yeah, here's a great example on this day right here. It just doesn't seem like you get the umph we used to. And once again, here we are, teetering around all-time highs. After that bar yesterday, looked like we may just be ready to just rip and go. And today, a different story, an inside bar. We'll have to see what happens tomorrow. But I show you this because this is kind of going to dovetail into the swing trading talk we're going to have later this afternoon. When you get to these levels, it's real easy to get excited and load the boat but sometimes you should be doing just the opposite, maybe selling, maybe if you are going to enter position, enter a very small size here, because a lot of times we hit these levels and go through and they just don't seem to last very long. So we'll see what happens here, but the market, once again, it's the same story. There's not a whole lot of bearish case. It just is summer, and we're just, there's just not a whole lot of enthusiasm as we go to these levels each day. Yesterday you can see right there, a close at all-time highs, only to be followed by a gap down and close, over 0.5% lower in the spiders. Let's pull up the Qs real quick. And same thing, probably a little bit worse because of maybe Facebook, but it wasn't too bad. But same picture, almost identical. Once again, close at all-time highs and then gap down and sell off to pretty much all day. IWM, boy, we really thought we had something yesterday. Look at that move yesterday on nice volume. Look at that volume bar yesterday, a nice green bar. And boy, you were thinking, I was thinking today, maybe a little inside bar, but yeah, to retrace over half of that bar, finish down 1.34% in IWM, not really what you want to see. That doesn't mean, look, you see, we're above the moving averages. This may finally, work up and break out of this level right here. I could easily see this happening in the near future, but boy, you really don't want to see this. It kind of can be frustrating. Actually, Steve bought this yesterday, I think, in one of our accounts, and I was looking at it and thinking, oh boy, that could have some follow through, but look, whoop, came right back down. All right, but for the most part, look at there, above the averages. Diamonds fell below their average today. They've been kind of leading the way and we're holding up very, very well, but now they fell below that 10-period moving average. Got the 20-period moving average that could help it here. We'll see what happens, but once again, no bearish case, just not a whole lot of enthusiasm as you get to these levels, and that can be frustrating at times. And I do see some selling when stocks, you know, are setting up and looking like they're gonna rip. But Jamie, that's about all I have for the SPYs. If you got anything you want to add to
Well, we all know that Google reported after the close, and based on what the market was doing, a lot of people are thinking, well, maybe things aren't going to be so good. But looking at the after hours action in Google, I'm assuming the market liked what went on there. I think it's up
Okay.
almost 100 points.
Oh, wow. Yeah.
Yeah. So, Facebook not really doing a lot. They reported this morning though, so that cat was already out of the bag, right?
Yeah, and they got that investigation hanging over their head, so that one, may not be in favor. But wow, yeah, Google.
Yeah, so hey,
Amazon,
who knows what's going to be primed up for the open tomorrow?
Amazon just the opposite direction though, so yeah.
Oh yeah, okay.
Yeah.
Well, hey, it's anybody's game tomorrow. We'll see.
Yeah, although that's not a very big move for Amazon, so basically, not bad though. Yeah, we'll see what happens. We'll see what happens.
But hey, kind of going back to what you were saying earlier, Andy, in the old days, we'd get these pops, and yeah, you're right. There's just so much change that's went on in the market infrastructure itself that, well, it's only gotten harder over the years. Trading's never been easy. Swing trading, intraday trading. It's actually gotten more difficult over the past 20 years just due to all the infrastructure changes and high frequency trading and all that good stuff. But yeah, I remember the days where boom, technical analysis was, well, I hate to use the phrase more reliable, but yeah, the moves seem to be truer back then versus today. But
Well, yeah, you do have a lot of, obviously a lot more algos in the marketplace as you do than you used to, and they kind of, it seems nowadays they will kind of kick the stock price back and forth, not let them rip like they used to, and then of course gap them up the next day. I've seen that over and over, but still, things are looking good. Just be careful getting all excited when we get to all-time highs, because it's just, boy, lately it just doesn't seem we have too much oomph when we do get there.
True.
All right, Jamie. So yeah, we'll bounce it over to you, and you can.
Yeah, sure. Here we go. I'll
take over and talk a little bit about Holly.
Speaking of a stock that did not care about the down market today,
yeah,
processed fake meat just does not care about what's going on in the market today. All-time highs.
I think they have earnings in a couple of days. Yeah.
Yeah, coming up in
interesting.
About 3 days at the close. So yeah, we'll see what Beyond Meat continues to do. It's just funny in the technology-laden marketplace that fake meat that bleeds is the darling IPO. We'll see. We'll see how it ends up. All right, everybody, welcome to my desktop, and I've got the Holly All Trades blotter pulled up here, and we can see the different modules over here. But boy, the old gray mare, Holly 1.0, the shining star today, busting out only 3 trades and being up a little over 3 points. You can see over here, Holly 2.0 kicking out 5, call that scratch almost, up $8.33, assuming you're trading 100 shares. And then Neo kind of pulling up the rear there with 7 trades, up about 3/4 of a point on 100 shares. But boy, out of the 3 trades that Holly 1.0 made, it was really one that's carrying all the water here. We can see that Holly Grail finished in full risk mode. And boy, this is the trade that really got her the glory today. And that was a short in SAVE. And what a pretty chart this is. Boy, usually, we're used to seeing these to the upside, because once again, we got the starting statistical viability from downward dog. So let's just let's rearrange the strat panel here. Let's get the shorts up at the top here. Downward dog came to the party with 60% probability rate. That's pretty darn good. Now, we had 2 trades come out of that one today. It hit 50% success, whereas these other short stocks had one and done. So that's why we're seeing 100% there. But definitely the biggest winner today was the save, which we can see right here. So as always, we got that statistical probability starting it off for us. Let me squish this up a little bit because we did have considerable down gap in save, which isn't necessarily a bad thing. Let you know that something's going on there. But we got this nice little consolidated area right here where Holly generates the signal. And then immediately my eyes go to, okay, we got statistical probability. Smart Stop kept us in right here, which is what Holly was using. You know, could have used 1%, 2%, but the Smart Stop did the trick today. Looks like just about any stop would have kept you in there because we just got immediate movement down as soon as that signal was generated here. And then what did we have playing out? Let's see, 30 minutes later. You know, usually, like I say, we see these to the upside, but today the undertow was down and the short in save was the place to be because as soon as we got down here, we had a range break as well, which would have been a great time to go, you know what, I'm in 100, time to leverage that position because we got this nice, crisp, tame secondary pattern playing out. Now, of course, check out the relative volume, and this is how it finished, 15.8, that's how it finished. Yeah. So back here,
a lot of selling.
a lot higher, all right? So, you know, when you see that type of setup, nice and tight, with this type of volume behind it on top of the statistical probability, we got 2 stars there. We got the alternative pattern setting up for the leverage or adding to the position. So once again, a great, you know, what I like to call 3 golden stars all lining up there. And man, what a nice tame trade to be in. It wasn't just ripping down. It was just a steady march all the way down into the close, right? Could have held this thing all day and never really had to sweat about it going against you. So, you know, take a look at the little shaded area here, which is a little bit hard to see here. I got the orange arrow there indicating where the range break occurred, 30 minutes after the Holly signal. But man, what a big difference. You know, a pretty huge spread today between $1, which is what Holly closed out because the price target got hit, right? Always good to see a price target get hit. Man, look, you know, she gets out right after the range break or right as the range break is occurring, which to me, that's definitely a sign to stay in and maybe even add to the position here. So just by, you know, sticking with your original lot, maybe doing the 50-50 methodology, taking my point on the first lot, break even stop would have kept you in nice and clean on this one as well. So no risk on the second lot other than a flat if that would have happened, which in this case it did not, and you got to enjoy just this nice smooth movement down. So $2.14 in there to take advantage of on save, a no wiggle trade. It's hard to get any better than that.
You bet.
Nice and easy. So definitely the shining star today out of the Holly selection. But we still have a couple of decent risk on spreads here. Got a long in the mix, LKQ. Nice little Holly signal up here. We got the run up in the first 45 minutes. Now, you know, even though it only took 45 minutes to kind of take its time here, if we went to a smaller time frame, like say the 5s, might be a little bit more visible. But we did take a little pullback here. And, you know, if we just kind of draw a line here on the 5-minute level, it's a little bit clearer. But basically coinciding once again with, even though it's a little bit more stretched out, a little bit more energy expenditure leading up to that little consolidation area there, pretty much the same song, same dance. Some charts are going to be prettier than others. This one's definitely not as pretty as what we just saw in save, but the methodology is the same. We still have that range break coinciding with the Holly signal. So on a down day to have LKQ, just keep on motoring up for the rest of the day here. Not bad whatsoever. And we can see this little consolidation area right here, and she had the timed exit on this one, right? So it made it the duration. There was no reduced risk or profit save. So we had a nice chart for that one. Let's take a peek. And we'll see nice chart, even higher than that initial one that got us into the short on save, 62.3%. Once again, oops, I got off cue there. Let's take a look at how the volume finished. And all 3 of these that we're going to look at finished with exceptionally higher relative volume. So we finished with 2.55, needless to say, Might have been a lot higher back here. I forget what it was exactly at that time, but this little guy usually only kicks out not quite 3 million shares, finished the day well over that at 4.2 million. But we can see right here, not the timeliest exit for Holly, let a little bit slide away here, but we can see in risk off mode, she was up 35 cents at this peak right here. But by the time the timed exit rolled around and she did what she was programmed to do, we only got 3 cents in risk off mode. But once again, playing the same game. And we'll just flip back over here to 15-minute charts just so it's a little easier to see here. You know, once Holly gets out right here, we could do it. The break-even stop would have kept us in this one as well. So whether you kept the whole lot and went risk on, or did the 50-50 methodology, that break-even stop would have kept you in. And just like on save, what do we have here? We've got that fast line, man, sticking to that thing like glue. As soon as we get a close below it, that's when the party was over, right? If we go back here to save, forgot to point that out earlier. I mean, look at how that thing is just keeping that thing tapped down all day, which I like to say, with the added benefit of the 10 period, you got 10 period, you got volume, you got auxiliary patterns playing out on top of the patterns, and you got statistical probability. So when all four of those things are cooperating, you know, doesn't work all the time, but man, it it works a lot more than it doesn't work. I can't put an exact number on it, but you know, those of you who attend on the regulars know exactly what I'm talking about here. So we had the same thing, but to the upside in LQK today. And lastly, no big surprise here, it was another short that had a decent risk on, risk off spread here. Now, of course, getting back to definitely the prettiest chart, pretty attractive chart here. And out of these three, I definitely have to say this is the most unattractive chart, just simply because look at all the whiskers, look at all the wigs, look at the oscillation, right? But movement still pretty much the same. Get a nice short entry here. We get some immediate gratification. Yay! Only, you know, oh no, you know, many people have been in this position. Hey, we're down, we're up, we're down, we're up, but still adhering to that entry line. Now, you know, hindsight's always 20/20. So if you're sticking to your hard stops, yeah, would have been easy to stay in this one. But once again, we're looking back in retrospect. So, you know as well as I do, Andy, a lot of times trade's not working, and the longer time it goes on, you're like, well, why am I just going to sit here and get stopped out? I might as well just minimize my losses, right? Sometimes that's the wise choice. Sometimes that is not the wise choice. In this case, Holly thought it was the wise choice, and she was almost right. She got out somewhere in this, in this candle right here on the shaded entry, looked real smart. Stop never occurred, and then later in the day, thing finally capitulated. But once again, when you're looking at a chart like this, I mean, you almost have to flip a coin, because I mean, what do we come? 22.20 was the stop and the high of that candle. Why is it doing that to me? It's taking away my numbers. Let's see here. And the high of that candle was, I mean, it came within 2 cents of getting stopped out, right? So even though there was risk on money there, probably one of, the most difficult one to make the decision on here, especially after we get up to this the 50 period here. You're thinking, well, maybe we let it close below it. These guys were stellar right here. Fate, flip a coin as to whether or not you would have stayed in that one as well. And that's pretty much all the risk on, risk off we're seeing here. I mean, we had 7 cents here, and then risk on, risk off spread becomes non-existent pretty much after those 3 trades there.
Yep.
But not a bad day for Holly on a relatively low trade count of only 15 trades. So with that point total, even after commissions and slippage, if you were automating Holly today, you probably came out on the positive.
Yes, you would have. All right, Jamie, good job.
Yeah, so I'll kick it on back to you. Hey, and as Barry was pointing out to us earlier, we were all having a little chat. He's like, man, I'm definitely going to keep my eyes on LQK moving forward, and I think that's a good idea. See what that little guy does tomorrow.
For sure.
All right, here comes the baton, Andy. Back to you.
All right. One other thing I wanted to show off, I guess you'd say, guys, is Holly. If you look at risk off, that's when you basically take whatever Holly exit that Holly takes, you get out with it. With her, anytime you see this, guys, when you have a bunch of green here, you know, and only a couple of reds, that is a pretty good system. And she's last 3 days, I remember on Tuesday I was showing the same thing. That's strong. And one other thing I want to point out, the two that Jamie showed you there, save, one thing that you should have noticed, earnings date. Okay, so this was an earnings play, and also LKQ was an earnings play. So the best performers today, if you held on to these things, no pain there in LKQ, I should say. Both earnings plays, both doing some pretty decent volume. Surprise, I'd like to see a little bit more in that LQK, but nonetheless, yeah, that's one to keep an eye on, because it's kind of got that let's go fishing look, where it's been beaten up, over the last several months, but making a turnaround. And it did hold this level right back over here. So yes, I agree with Barry. One you probably want to keep an eye on if it takes out the high of today. Yeah, could have a further move. All right. I'm trying to remember okay, I think I do remember them. All right, guys, we're going to talk some swing trading. Because once again, I get lots of questions in our online chat and to our emails, about what windows do you have for swing trading? And of course, I point them all out to them, and nobody ever seems to think about extreme volume, high-low pro. They think that's a momentum, and that's nothing but momentum. But I'm going to show you, and actually one of the trades I took yesterday from that. Obviously, you heard me talking about it the other day, so you kind of knew I had my eye on it. Well, let's just go into it. And if you're in a multi-strategy window, sometimes if you just want to look at one strategy, the easiest thing to do is just pop it out. Okay, so what we're going to do is we're going to go to extreme volume high, and we're going to open alert window. Now it uses some kind of funky default here, but that's okay. All we care about is the symbols coming through. And once again, guys, I think this can be, even if I can promise you, I know how people think. They see these things gapping up and taking off, and they say, gosh, missed it. Let me find something that hasn't gone yet. And that could be the biggest mistake that you make when it comes to swing trading, because I can't tell you how many of these symbols come through here and their first day just being explosive, and these things will never look back for weeks sometimes. So let's take a look at it. Let's go back to yesterday. Let's look at a couple of days here, because I want to go over each trade and kind of tell you the things that I look for, when I'm playing this. And I think a really good example is one of the first ones that came through yesterday was Snap. And of course, I had my eye on it because it was a beautiful gap and go. If you look right here, you had this high for the month and for the year, I believe. I'll go back and look just to make sure. Yep, I think that's a year. All right. And that is what you call basically a gap and go. Great example. Now, obviously, they don't have to be at all-time highs. Sometimes it's great when they are at all-time high, because you have no resistance above. But boy, if I just have a little bit of area, if I have a 52-week high, I'm happy, because I know that's big. Okay, you had a stock off earnings that's gapping up, and even though it may have gapped up 10, 11, 12%, and that's when people look at it and say, darn, I'm not going to chase it up here. Wish I would have been out. Wish I would have held it overnight. I can't tell you how many times I've heard people say, damn, wish I would have held that overnight, and they forget about it, and then they come around 2 weeks later and the thing's up another, 50%. But all right, so this is one and that I traded yesterday. And what I will do is I'll look for that break. And sometimes I don't like trading the first 15, 20 minutes a day. You guys know that. But if I feel confident in a move, and especially when it's a gap and go like this to at least a 52-week high, I will be more aggressive. Now, I may not take my full position, okay? Just in case it does that head fake and turns back around. But remember, I'm doing a swing trade here, so I got a little wiggle room. It's not a day trade where you're you have to make money in the next 2 hours. No, I'm looking at further down the road. So the way I traded this, and let's just go back and take a look at yesterday's action on the 15-minute. Okay, I bought a half size. Basically, I think I entered it at 16.35, something like that, 16.35, 36. Rode up. I let it basically just let it go sideways for a little bit, and then what happened is when it got right here, after, you know, I was a little bit nervous, got below the fast line there, but it never really breached the 17. If it did, it was bouncing back real quick. And then when it got above here, I added to my position. Okay, so now I got a full position in it, and everything was looking good. And today, actually, I think it could have gone a lot further, but once again, you always got to look at the backdrop of the market. That's so important. If so many people get caught up in their own charts, they're not looking, hey, you know, market's down big today, you know, maybe this is not acting like it should. It acted fine. To be honest with you, I did sell out some today on this break right here. I ring the bell. I had a nice position. Nothing wrong with it. You know, if the market hadn't been doing what it's doing and this didn't kind of break down right here, I probably would have held it, but I sold half and I'm still holding on to half, and I have probably no reason to get out of that unless it comes back down and breaks out this low, you know, or my entry, you know, depending on what the market's doing. Okay, if the market's selling off hard. But I wanted to give you an example of kind of how I trade one of these. Okay, now this is a swing trade, and I'm just going to give you an example and show some of these. Let's take a look at the next symbol that came through yesterday. UPS. Once again, it was off earnings. Okay, now this one a little bit different because you have some resistance going back over here to about 4 months ago. All right, but when it took off, when it opened up, okay, it's very much the same as Snap. It gapped above this 2-month high here. Okay, so you had all this space right here that, you know, for potential movement. If I see something like this with a lot of room, that's a different story. You know, if you can catch this thing quick, you know, and ride this thing up, and you can see it bumped into it yesterday and really kind of stalled right there. You can see it closed right below that high. Well, today we got another gap above that and go. So, oh, thank you, Mike. I appreciate that. So once again, guys, both of these on the extreme volume high-low pro, they're gapping up, and sometimes they're gapping up 10, 15%. But you know, if the volume's there and the chart is there, don't be afraid, because remember, you're swing trading. You got a little wiggle room. You know, you can give it 3% against you. Not to say that you have to. Let's take a look. Look here, the next one that came through. DFS. Now, I know these are all early in the morning, okay? But, you know, DFS, even if you did give it maybe the first 30 minutes and entered it right here, okay? What do we have here? Position an all-lifetime high on Discover. This is a gap and go with no resistance. You don't see any red lines there. Gorgeous move yesterday. And today, you know, kind of look at, if you're looking at the overall market, you know, finishing down like it did, this one held its own, down marginally. This is potential go, pause, go for tomorrow. Waleed asked, as a recommendation, 5% is okay for a stop? It's relative, Waleed. It's all relative, okay? Well, first of all, I'm always watching the market, so that can change at any time. If I feel like if the market's rolling against me hard, if I'm long, and then my chart is looking like it's trading with the market, I can change my stops. I do it all the time. But nothing wrong with a 5% stop loss. But if you have to be looking for at least a 10% on the upside, you want, when you're swing trading, you want at least a 10-1 profit loss ratio, okay? Because you're going to be wrong sometimes. You're going to take some losses, okay? So you got to make sure, you got to make sure you have at least a 2-to-1. I prefer a 3-to-1. That's why I'm more of one that looks for the setup, and you know, and then if I'm wrong, I'm out pretty quick, which is about 3%. And I've been known to punch out sometimes for even a flat if I got my move and then something happened, it rolled over and went flat. Yeah, I've been known to get out for a flat as well. Texas Instruments. This one, once again, all-time high. You had your gap and go yesterday. Was definitely some, you know, from 126 all the way up to 129 and some change, so about a $3 move. Today kind of got caught with the market. Okay, so this is you know, a pretty big gap up there for a Texas Instrument, which is more of a kind of a commodity than a high flying, you know, look at the quarterly revenue growth here. So if this quarterly revenue growth would have been like 50%, you would have seen a much bigger move. And so this one is actually, their quarterly revenue growth it went down, but it may have came up this last earnings report. This is old data, but still, I can't imagine it's that big. So this is more of a tanker to me. And when you see a gap up like that, yeah, I don't want to get caught up in which ones you're supposed to based upon their fundamentals, but anyway, there's a reason why I probably wouldn't have chased this one. AutoNation, once again, AutoNation a little bit different, okay, but if we look, this is going to, let me stretch this out here so everybody can see it better. Make this a little bit easier for our eyes. Okay, so now the arrow is messing with me now. Let me take it off the arrow and just type it in. All right, you can see here, once again, guys, I mean, this is a little more difficult, but you still had a multi-month major high right here. Horizontal line. I like to watch these technicals. Now, once again, it was an earnings play from yesterday. You can see right there, 1.75. You can see the move, the huge volume bar. Now, yes, you had some congestion right here that you would have to be concerned about, but that's still a pretty decent move from 43 all the way up to, 45, about a $2 move, just to that move right there. And really, that is a pivot point, and if it gets through that, you can see what happened. It is off to the races, because that's a major pivot point. You can see right here was old resistance. Okay, now it became support. I'm sorry, old support. Now it became resistance, and then once you poke through that, you can see the subsequent move after that. Those are the kind of things, look for major pivots, because when they do get through major pivots, they can have a lot of juice. But once again, guys, extreme volume, high-low pro, look at this move. And I want people to focus more on these things when it comes to swing trading, because they can be great trades. All right. I don't want to spend too much time on this one, because we do have to move on. Under Armour there popped up, and there's nothing going on there. Might want to put a alert on this one if it does go across this double high right here. I think I'll do that myself. All right, let's take a look at today. See what came through today. Now remember, a little bit different backdrop today. Yesterday we had a strong market. Today we had a weak market. But I did see some things in here that weren't, all that bad. Now, personally, me, ENTG, I probably wouldn't chase it. It's the reason why. It had earnings this morning, but look at the move it had going. Somebody leaked something here the last couple of days on this one. A huge move going into earnings. So even though that was a nice little breakout, you can see it did. A lot of sellers came in, because I can promise you, all these people that got word were finally taking profits. But nonetheless, I got to move on. I'm looking at the clock here, and I got a lot of stuff to go over. This one not bad. Hazard. Tough one there. It ran right into the resistance over here. Even if it got through there, you had another one up here. Looks like it finally probably touched that as well. One, you might want to just go ahead and create a little price alert when you see these things. Saw a couple of good ones that I'd set a price later. I think I've already said it. This ARI. Okay, this one, well, that's ugly though. That's an ugly close today. But I set one up here earlier in the day, but it really, now that I'll turn around and look at it. And Fire Eye, I noticed coming through here that you might want to keep an eye on. I can't remember if that was earnings when I saw it. Let's see. Look, there's UPS coming through again today. So let me just go ahead and type it in instead of looking for it. You can trust me, it's in there somewhere. But yeah, this is one, and looks, well, they have earnings in coming up next week, so might want to keep an eye on this one. This is kind of setting up, nice little cup and handle here. Can break through this level right here, be a multi-month high, could have a little juice there. Maybe watch that, you know, if after earnings you get a gap, this could be a potential, you know, gap and go through the 200. All right, but guys, pay attention please to the momentum alerts. They can be great swing traders. Now, I'm probably going to skip. I've talked a lot about pullback above 50 SMA Pro. That was on the list, and I still like to keep an eye on this, you know, possible setups. But I've talked a lot about that one, so I'm going to move on to one that Steve's been talking about a lot, and it's I'll take that. Thank you. Let's take a look at today. Now, this is another one where I'd be watching. Let's take a look. UAL saw some weakness today. Let me just go ahead and put the, we want to see the opening. You can see the opening right here, jammed down and closed right at its moving average. This was strong, had earnings 6 days ago and had a little pop, and it's been going sideways. Saw some weakness today because of SAVE, came through the alert, closed right at its fast line. Maybe one to, you know, keep an eye out. I'm not going to share these guys, I'm sorry, so I hope you're marking them up with me. All right, because I got too many price alerts in there, but I don't want to raise. Splunk, another one today, came right down, touched its 20 period, I'm sorry, the 8 period, and bounced up. Nugget's one to watch. GDX, if you don't want GDX, if you don't want Nugget, nice little pullback right there to the 20. This is one you might want to catch an eye on. See, this is one that if I'm swing trading, you know, I'm not going to jump in full size right here, but this is one where you may take a third of a position or a half a position. Okay, you got your pullback you wanted. It's been, you know, doing pretty well when you look at this fast line. Well, it's here again. Let's see if it can hold on. But gold, you got to be careful with gold. Here's another beauty this morning at 8:52, came right down here and kissed it, and a nice bounce up. This is where, if you're a swing trader, this could be good for day trading or swing trading, but boy, if you're, you know, if you get a position right here at lows, boy, you're setting up good. If there's a breakout, here's what you know, here's the possible scenario. You buy half a position, okay, at this lows, and then if it breaks out of this high right here, you can add. Now you got a nice position with a price in between there. So if it does head fake you, you can still get out for a profit. Sinks, that was pretty nasty today. That's an ETF, just a Qs here. But you can see a lot of these, they come down and they hit that level, and then you know, they may, a lot of times they go through a little bit deeper. But keep in mind, guys, if you're swing trading, you're not worried about another 1% against you. Okay, you're looking for a 3 to 5%, you know, loss. So these can be great little entries. KNX later in the day, right here, I believe. Look at that. Doing. Okay, that could be a really good entry. All right, so I'll take that. Another one, this is just the opposite of extreme volume high-low pro, where you're not buying the momentum. You are buying stocks that recently had momentum, but are pulling back now to that fast line. Those can be great. All right, I want to talk about Let's Go Fishing. It's a different animal, okay? And we'll take a look at some of today's history. Let me get a drink of water here. All right, let's just take a few of these that come through here. WFC came through this morning. This had earned days ago. Kind of, this is tough. Anytime, if I'm looking at Let's Go Fishing, I don't want to get one right after they've had 5, green bars up in a row and a pretty big percentage move on top of this. This has had its move. You look at earnings, it's had its move and running right to its 200-day. That one I'm being a little bit, careful with. But you can see, okay, it's been beaten up over the last year, showing signs. This is one that it may trade sideways, maybe put a mark, maybe put something right above that 200-day. And if you get a move, it's going to clear that 200-day, and it's also going to clear this, all these tops right here. So I hope this is making sense to you guys. What I'm showing you is kind of the, the things I look at and the things I do. Now, here's the problem with Let's Go Fishing. Wally, you talk about a 5% move. I won't give a 5% move like this, and the reason is it's in a longer term downtrend, okay? Just because it's looking good over the last 20 days doesn't really mean the trend has been broken. You can see it's below its 200-day. A lot of these are going to be below their 200. A lot of them are going to be below their 50. So when you're wrong, you got to get out quick. These are ones that I look for, to make a move, pretty quickly. I think this is one that was actually coming through maybe even yesterday. I'll take a look. See, a lot of these ones, even though you're seeing them now, you would have seen them. WFC was probably good. No, that probably didn't come through until yesterday. Let me do that. Let me go to yesterday and see what, I want to see the ones from yesterday. Look at that. Look at this one. Oh, never mind. That was the day before earnings. So somebody knew something there too. GMed. Okay, you got this yesterday at 43.99, so probably got it earlier. Let's take a look. Before to do that, I want to take a look at 3M. Nah, never mind. Earnings play. I won't take these going into earnings, that's for sure. And probably a lot of them are going to be going into earnings. Let's see, here's a good example. VSH. Okay, it's coming through. Okay, let's take a look at what we have here. Okay, we have a pattern that's been beaten up over the last year. Okay, putting in a nice little, bottom here and trying to do a little cup and move out of that. You got the alert yesterday. You probably got it sooner. SHH, yeah, there it is right here at 9:57 at 17:02. So yeah, you probably got this thing. Now that's probably the same, the first one there. Yeah, there it is right there. Oh wait, that wasn't it. Where was it? There it is. Yeah, FSH. Okay, this is a good example of one that you would have gotten to around $17, which is close to where it's trading at now. This is one where earnings are not for 3 days, so I'd be careful. If I'm looking for a move like this, I probably wouldn't hold it into earnings. But you had a nice move yesterday. Okay, this is one where I'd probably take a chance on, but once again, I wouldn't give it much. I'd probably give it down here to 1666. And really, I don't like because it has earnings coming up. But I'm just trying to tell you, guys, you got to be real careful when these don't work. They have a tendency to pull back pretty hard. So be careful with Let's Go Fishing. You can catch some really good ones in here. Well, there's one from yesterday that had earnings and got driven down. Yeah, I would avoid any of these in earnings play. This is the one not looking that bad. Been beaten up for a long time, but starting to show signs. Look how it's holding this moving average now, okay? So this is one that might take a chance on, but if it fell back down through this fast line, I'd probably be out pretty quick. These can be big players. I mean, you can catch some moves in here, guys, when you're right, because it's Let's Go Fishing. It means you're bottom fishing, okay? You're looking for something that you can catch and maybe get a nice ride for weeks, I mean, sometimes months. So when you're right on these, you need to be right because you are taking a chance, okay? It's a risky play because you're not buying something that has a nice upward sloping, pattern to it. It's more of a turnaround pattern. So you want to make sure if you're right in these to try to hang on for it, and at least some of it for a long time, because if they are reversing that trend, it can be a huge move. But at the same token, a good percentage of these are going to fail, so you need to get out early. Okay, so enter at your own risk. Once again, I do find some good ones in this, but you can get things like this too. So I'm really surprised. All right, so those are those three that I just showed you, and the pullback above 50 SMA Pro is probably my 4 favorite alerts for finding decent swing patterns on. Trend change lubricant is another one that my Let's Go Fishing is very similar to that, but I like this one better because it usually has some pretty decent fundamentals in it. But yeah, be careful around earnings season. Okay, you want to keep an eye on the earnings date, but a lot of times, well, yeah, you can find some really good ones in here. All right, Jamie, I think that's about wraps it up. Like I said, I've gone over a pullback above 50 SMA many times. But oh yeah, one other thing, guys, always, okay, it's really easy to get caught up, okay, in your strategy, whether you're chasing momentum, or you're trying to buy pullbacks or looking for maybe trend change reversals. Always keep an eye on the market, okay, because most stocks are going to be affected. Obviously, stocks right after earnings a lot of times aren't affected by market movement, but the majority of them are going to be trading with the market. So if you do see the market turn down hard for 2 or 3 days in a row, don't sit here and fight your swing trades. Okay, market will always be here. You can always get back in, but just I wanted to say that, man. Always keep the backdrop of the market, in mind. All right, Jamie, did I have any questions that I missed back there?
No, we had some comments, but not really any questions.
Okay.
Good job, man. Good stuff.
All right, great. Let me just go ahead and fire this back up, and I'll bring back in Scott, and he can walk us out of here.
Thanks. Yeah, that sounds great. So we do have a new series of ebooks. If you haven't gotten them yet, go ahead and download them. Trade-ideas.com/setup is the URL to go to get them for free. There's 3 books. Each one has 2 chapters, different subjects on each book. Jamie and Andy each contributed some chapters, so do check them out. They're going to be useful for you. We got a podcast that comes out weekly, so get ready for that by searching for Trade Ideas Podcast wherever you listen to your podcasts, and just add us as a subscription, and check out the back issues. There's some good interviews in there too. We have a code that's good this month, summertime. It'll be good until about this time next week, so make use of it before then. 15% off your first month or year of Trade Ideas, and those of you that are on a standard subscription can also use that to upgrade and save the same amount. Any questions, email info@trade-ideas.com. That's the best way to reach us for help, because it goes into our help desk software and gets tracked and routed to the appropriate team member to answer your questions and help you out. Well, you can follow Jamie on Twitter at QuantBot. Steve Gomez is at Today Trader. We also have at Trade Ideas. Facebook.com/TradeIdeasPro is the Facebook page to like and share with your friends. We're going to have the recording up later on tonight or tomorrow morning, and you get an email reminder from GoToWebinar tomorrow with a link to the playlist. Thanks, Andy and Jamie. Have a good one. Thanks, everyone.
Thanks, Scott. By the way, guys, all of those alerts I showed you are on channel 4 in our channel bar, except I'll take that. We haven't added that yet. So if you want it, just send it to what Scott has up there at info@trade-ideas.com, and I'll get you that to you. I'll take that. Thank you.
Yep. Don't forget about the Friday support session, 11 a.m. kickoff Eastern time tomorrow.
Yep. Thanks, everyone.
Bye-bye.